This is a case study. We're going to be going over ES longs, a trade I took last week on Friday. So again, this is a key level. To quickly break things down, why was this a key level? So again, we have the Asian range, something I always speak about. Notice how we had a very subtle sweep of the Asian range over here. So the Asian range low. So this gives us our Judah swing. So this was my confirmed or my predicted low of the day. This is the Judah swing. And now from here, we're entering a fair value gap. So I like to be a little bit broad with my zone. So we had a fair value gap just over here. This was my key level. Now, what makes a key level? It's very simple. Key level is essentially a 15-minute fair value gap. So when price gets into this 15-minute fair value gap, if we go down to the 5-minute time frame, when price gets into this 15-minute fair value gap, we are looking for something very simple. We are looking for this. That's all we're looking for. So it's very simple on the surface, but we're going to be using order flow to our advantage. Now, a couple of things we want to see over here. I'm going to break this down before we get into the actual candles itself. We're going to be looking at delta, and we want to see negative delta coming into the area. So negative delta represents aggressive selling, right? So we want to see this. We want to see aggressive selling. That's the first thing. The second thing we want to see is volume, and in particular with volume, we want to look at shifts of volume, right? We want to see the volume shifting, and that's something we're going to be going over on the footprint chart. And the last thing we want to see is we also want to see something called a finished, if I spell this right, finished auction. And a finished auction is when we have a zero on one side, right? So if you remember, we have the bid on the left-hand side and we have the ask on the right-hand side. So what you want to see is you want to see a zero on one side, and you want to see zero on the bid. Because when you see a zero on the bid, and we're going to be going over this on the footprint chart, when you see a zero on the bid, what that represents is there's no aggressive sellers trying to drive price down. So let's see how price enters the zone, right? So we enter the zone, and again, we see a wick, right? So if we just go down in price, again, we see a heavy sell-off into the zone, right? We see a heavy sell-off. We're still within the zone. We've still stayed in the zone. And now from here, we're starting to see a bounce up in the markets, right? So we see this kind of movement over here. It's very interesting because now I'm going to bring people's attention to the footprint chart. So let's understand the footprint chart and how we can dissect this to our advantage, right? So it's the exact same key level. We're in the same key level. It's the same candle. So this is the same as this, right? This is now a 5-minute chart. We're going to be going over each of the candles, right? So if we just dive into kind of the candles over here before the move up, what we're looking to understand is the delta and the volume, right? So let's quickly just go over the settings as to how I kind of mark this up, right? So we have the bid and the ask, so that's the content, that's what the data represents, right? So in terms of the mode, we want to have our delta profile. Now, if I go into additional footprint, we can also understand the volume profile. So when we have the bid and the ask and we have the volume profile, we can see some very interesting things, right? We can see things that we can't see from a regular candlestick chart. Let's kind of zoom in. Let's keep our notes with us as well, right? So as price comes into this area, price comes down, right? So we get a mitigation and we have these kind of 3 candles. We have 1, 2, and then we have 3. And then from here, the 4th candle is what moves up to the upside. So we're going to be dissecting these 4 candles on the footprint chart. So let's see what happens. Let's start with the volume. We can see a very small amount of volume over here towards the bottom of the candle. We can see a small amount of volume towards the bottom of this candle, and we can see small amounts of volume on this candle and this candle. So we're seeing, as the market has moved down, we've had a massive kind of move down over here. We've had a massive move down over here. We've had a massive move down over here. But you can see the volume is decreasing. The volume is actually very high towards the top of the candle. Again, towards the top of the candle, we see high volume, right? When we see a decrease in the volume as price moves down, this shows us that there's a lack of interest at lower prices. So already as a trader, when you're entering a bullish fair value gap, when price comes into this kind of bullish fair value gap over here, this 15-minute fair value gap over here, as price comes into this fair value gap, if we decrease in volume, a decrease in volume means there's a lack of interest. So that's the first thing to understand. Now, from a delta perspective, it's actually very simple. Look at all this negative delta over here. So if we just read the order flow, let's actually read the order flow. We see basically almost the entire bottom candle. So again, we have the body. If we break this down, it's very interesting. We had a wick. We had a pretty large wick rejection over here. This candle over here. Again, if I show you the footprint chart itself on the 50-minute time frame, sorry, the candlestick chart, we have this massive wick over here. So this is at 3:30 UK time. That's about 10:30 Eastern. We had this large wick over here. But when we dive into this wick, what we actually see is that the majority of the volume was on the top half of the candle, and the majority of the second half of the wick, the lower half of the wick, correspond to a lot of aggressive selling. So now you want to ask yourself, there's a lot of aggressive sellers in the market, but you can see they're struggling to get rewarded. Price isn't rewarding them. In fact, price actually moved to the upside. So we're going to be going over two specific cases of delta for this particular trade. Now, we understand here the market over here, the delta is all negative. If we read the numbers, we see 717 for 422, right? Then we see 72 for 8, we see 241 for 4, we see 299 for 7. So what we're seeing, we see again 203 for 0. So we see a lot of aggressive activity towards the downside, a lot of aggressive sellers that want to push price down. So what we're seeing over here is we're seeing a lot of aggressive sellers trying to push price down, push price down, push price down, push price down. But instead, we had a large wick over here, which was unsuccessful, right? So this wick was filled with what we call aggressive sellers, right? The bid was very high, right? This is what we see over here. The delta is negative. The bid was very high. But then price actually broke past this zone, not once, but twice, right? We can see price kind of breaking through the next 5 to 10 minutes. We see a massive break. This green candle, again, is very interesting. This was 10 minutes after. This green candle here at 10:40 Eastern time was again very interesting. If we break this candle down on the footprint chart, that's this candle. Now, what we understand over here, we have 172 for 748. So that's roughly a 1:6, 1:7 ratio. We have 7 times as many aggressive buyers than there are aggressive sellers. That's the first thing. The second thing is look at how price kind of rejects this zone, right? We have minus negative delta. So we have 1K aggressive sellers, and we have only 400 aggressive buyers. And even here we have 388 for 0. So just by reading the numbers, it's very basic once you understand this. But just by reading the numbers, we're able to gain such an edge in understanding who is aggressive. So when we see lots of aggressive sellers in this region, but price is not being rewarded, what this tells us, when we see lots of aggressive moves to the downside, what this tells us is that there's actually passive buyers that are sitting here that are absorbing all the sell orders, right? So here is a case of absorption. This is absorption, right? This is absorption of aggressive sellers, which then leads to buying in the market, right? So this is how I framed this particular trade. So once the order flow had given me a prediction, right, I was willing to enter at the zone itself, right? So at the zone itself, so just after the zone with my stop loss just below this wick over here. Now, if I quickly go to a 1-minute chart, you then need to ask yourself, where was I targeting? So the first logical place to target was actually this over here, right? So again, I had my entry just at the zone itself, stop loss just below this wick. So it was about a 1 to 2 hour trade, right? Which is kind of what I'm used to taking. Now, why was this my target? Well, we have a fair value gap over here. Simple as. So we're essentially trading from a 15-minute fair value gap, and we're looking to target the local 1-minute fair value gap. This is a scalp trade. So again, price did eventually rally up in our favor. And the reason for that was, again, we had massive absorption over here. Think about all this red delta that was not being rewarded. Again, think about this red delta. We had 1,000 for only 400, right? 388 for no aggressive buyers, right? So when you don't see any aggressive buyers and you see lots of selling pressure, lots of aggressive sellers, and the market fails to move up, this is what indicates a move higher, because it shows us that there's passive buyers that are absorbing the aggressive sellers, and that stops them from moving the price down, and that's why we want to be buying. So we're almost doing the opposite of what the masses are doing, right? 95% of traders fail. So if 95% of traders are selling at this level, you really want to be buying. And that's essentially a sneak peek into how you can use ICT with order flow. So if you like this video, give it a like, give it a thumbs up, and I look forward to seeing all of you in the next one.